Is the Bitcoin top in, or will Bitcoin continue higher? In today's video, we are doing a comprehensive macro analysis discussing the key levels you should be paying attention to, macro top targets, historical trends, and much, much more. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are doing a complete macro analysis for Bitcoin, discussing possible top targets, key technical and structural levels you need to be paying attention to, whether or not a local top could be in for Bitcoin, where the macro charts are suggesting, and macro invalidations. We'll also be taking a look at the total altcoin market, as we have just broken down from a critical uptrend spanning back since the start of November. And of course, we'll go into massive amounts of detail with the short-term price action, discussing what is happening and what you should be paying attention to. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video help, news, and trade setup chat. Join over 600 members by contacting me in the pinned comment of the free channel by clicking my name, or the two links showing you inside our VIP channel with a 10-minute video, or our entire 46-month trading track record. Check it out, guys. It'll be great to have you in there, and let's jump on in. So as we said at the start of the video, we have a jam-packed video today. We are going into massive detail on the short term, discussing whether or not this is a potential local top. Is Bitcoin preparing for a correction? And if so, what does that really mean for Bitcoin? What does it mean for the short term? What does it mean for altcoins? And what does it mean for the macro? Or is this consolidation, is this exhaustion we are seeing develop simply just a short-term blip before we continue this macro aggression toward the upside? And that's really the premise of today's video. If we're to summarize what we're discussing, that sentence is kind of summarizing it absolutely perfectly. So let's dive into the market data to start with. 24-hour volume and liquidations. Let's take a look. Volume is sitting down 4.31%. This is at 230 billion. And liquidations are at 345 million, with 244 million coming from longs and 101 million coming from shorts. So we know already that a lot of people are aggressively longing over here. We can see already people are aggressively taking long positions at these price points. And even with this short-term 4-hour flush right over here, we saw a significant amount of liquidations in those long positions. With that being said, guys, we can see the price action has still respected this general uptrend represented by a diagonal trend line, and we managed to hold relatively steady above this level. We said in yesterday's video, while we are sitting above this diagonal trend line, while we are sitting this above the uptrend, we have no real reason to expect that Bitcoin won't continue higher. But we do have a very clear invalidation point that if it were to break, and if it does break moving forward, this would be a very clear sign we could swing back down to these lower levels of liquidity, back into 86, back into 88. We'll discuss that more in the video today. But overall, the price action is looking decent. We are now sitting above our prior high. We had deviation, which we have now invalidated, which we were worried about. And now we are potentially doing a support resistance flip of this horizontal level. So provided Bitcoin is able to now sustain above 93.5k, it is likely going to continue higher. However, if we do drop back below this region, we do run the risk of that correction yet again. We'll come back and discuss in more detail in a moment. Briefly going over to macro charts, we are going to be taking a look at a price prediction we made. Now, Yes, this is not likely going to be the macro top, but we made this price prediction all the way back in May 2023. May 2023, we did a price prediction telling you we expected 94.3 to 96,000. We'll discuss that in today's video because we have now officially reached that price target. We'll go over our macro charts, discussing potential tops, what to look out for bear market starts, etc., and so much more. Let's move over to the DXY. The DXY is still sitting at the range high resistance. We discussed this in yesterday's video. If we break through this range high and we continue upwards, that will be very, very bearish for risk assets, as the dollar will generally continue to rise in value, pushing asset prices down in relation to the dollar, because everything's valued against the United States dollar. Moving over here, guys, if we do see a rejection and continuation, this will be very bullish for risk assets. And if, of course, we do see that continuation downward, we would eventually expect the low to be lost, as this is a slightly bearish horizontal consolidation. As we entered from the top side down, generally we see continuations in the direction of which we entered. Also factor in the fact we are seeing more interest rate reductions moving forward. Eventually, the long-term effect of reducing interest rates results in a weaker dollar as inflation generally increases, as more debt is taken on and more spending occurs because cheaper debt again is available. So we generally see the dollar decrease in value on the macro scale after multiple interest rate reductions over many, many months. So that would actually add to the thesis that we could see the DXY drop eventually, which again is going to be bullish for risk assets. So from an economic perspective, the markets have not topped, but we are starting to see some potential top signals we need to talk about. We'll get to that in a second. Anyway, guys, before we get into everything else, let's look over the S&P 500. The weekly candle is still looking decent. We are sitting above our 5,700 level. Again, we are playing the S&P 500 level by level now. Provided our prior weekly high holds, which is at 5,700, provided its weekly high holds, we expect continuations. If we close a weekly candle below here, we will be turning bearish on the S&P 500. And you're probably thinking, wow, why are you turning bearish just before the bull market? Guys, the bull market has been going for a year and a half plus. We've been in a bull market for a very long time. We turned bullish on the S&P 500 back over here in March 2023, and we've been calling for $6,000 relentlessly every video for a year and a half. We have finally reached our target, and we will remain bullish while the chart suggests it is an uptrend. But if we break this prior high, that will be the first high point. We look at these prior highs over here, that would be the first of 3 higher highs that we have actually invalidated, signifying a massive shift in strength and that the sellers are taking over the price action. So we drop below here, I would be cautious, I'd be worried, but until then, I am bullish while we remain above it. Let's move over to Bitcoin, guys. Before we do, if you are interested in getting 45 to 15% discounts for life on all your trading fees, sign up to any of the exchanges below, BitGet, BitUnix, or BingX. You'll support me making the content, you'll support yourself trading with that massive trading fee discount, and of course, we'll get a bunch of rewards and bonuses alongside that. We'll play an ad and we'll jump into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay, legends, let's go ahead and jump back in, and let's start off with the grim fact, or the grim segment of today's video. And that is, of course, what everyone doesn't want to hear, and that is altcoins have broken down from their high time frame uptrend. The uptrend we have been in since Bitcoin established the uptrend, moving into the $90,000 region, moving out of that macro channel, which we established at the start of November for the total 3 market cap, has been lost. This is, of course, the channel we were discussing in yesterday's video. The rising wedge formation we had developed had the risk of breaking down, and we have seen that breakdown now occur. With this breakdown, we have seen altcoins drop about 10-15% for some of the lower cap meme coins, and for some higher cap coins, we have seen drop maybe 5-6%, and other coins have been able to hold pretty steady, because again, the total 3 isn't a direct reflection of altcoins. It is a general reflection of the entire crypto market minus Bitcoin, minus Ethereum. So generally, there are always going to be some altcoins that overperform. There are always going to be some altcoins that underperform. But we have seen the breakdown on the total three, something we were worried about in yesterday's video, which has now played out. Now, whether or not this total three breakdown results in the completion of the measured move, which is simply the expected directional move that is expected upon the breakdown of a rising wedge, which we take again 0.1, the distance between 0.1 and the wedge high applied to the breakdown. Whether or not we complete this entire move or not isn't really the point. The point is, while we have broken below this uptrend, the risk return for altcoins here are not favorable for entering new positions. The downside risk is no longer, or should I say, the risk of entering new positions is no longer there, particularly when we were so close to the parabolic trigger sitting at that $480 billion mark. So for me, what I'm doing personally now, I am waiting, I am watching, I will be turning bullish on altcoins again. And I mean, when I turn bullish again, I'll be turning parabolic level bullish on altcoins when we clear that $840 billion level. If we zoom out, guys, that $840 billion level is major yearly resistance. Here it is. We can see that yearly resistance right over here acting as that major resistance point we are testing. If we are able to get above this, we are likely going to see the total three push up to retest that 1 trillion, 1.1 trillion prior all-time high. That is the parabolic phase. We are at resistance. We are broken down from the wedge. It is time to be a little bit more cautious on taking new positions until we are able to get back in there and reclaim that trend. That is it for altcoins, guys. Worst case scenario, we'll discuss it anyway. Worst case scenario, we could see a potential move to 750. We enter this area, we find support, and we continue back upwards. I think the macro charts are still undoubtedly bullish. I think there's a good chance we do see a parabolic season, but we are so close to that validation point. The risk return trade-off is not there right now to be entering or aping into new positions. You're better off just forfeiting those few percent. I always say, missing an exact entry or waiting a little bit longer and sacrificing those 1 or 2% gains or 3% gains, that is the insurance you pay when trading to be correct, okay? It is the insurance you pay when trading to be incorrect. You do not need to squeeze every drop out of every trade, particularly if squeezing those extra $2 or $3 results in you taking on a profound proportionate amount of risk. So in my eyes, I am patient, I am waiting, I'm cautious, I'm aware of the breakdown. I'm not applying too much significance to it, but I'm more or less watching now how we react around that $840 billion level, which is still the trigger for the parabolic continuation. Moving over to the total altcoin market cap. Now, the total altcoin market cap on the flip side is looking very good. We are sitting above our prior high on the weekly chart. Now, we have completed our measured move out of the channel. We do have a potential bearish divergence developing. This, of course, has not printed yet. We would need to see a reversal candle print here for the bearish divergence to print, and that could be a warning sign, but has not yet printed. So a lot rests actually on the next 4 days of price action for our weekly candle to see how this weekly candle prints. Are we going to close above this prior high? Are we going to close below or in that range? That is a question we'll have the answer to in 4 days, and it's going to be of profound significance when it does occur. So right now, it is looking good, but don't count your chickens before they hatch. Wait for the 4-day close. Watch that weekly. Watch how the price action develops. But overall, it is looking promising. Let's move over to the macro charts, and we'll come back to the short term. Now, over a year ago, this was back in like May 2023, March 2023 then, just after I predicted the bottom. I told you guys. Now, if you've been following the channel, just to go over it really simply, we told you at 64K, we were actually the first channel to come out publicly and say Bitcoin's top is in at 64,000. We turned bearish for the first time ever since we were bullish back over here. No, I didn't have a YouTube channel over here, but I was relentlessly bullish the entire time up, okay? We turned bearish at 64K. You know, I copped so much hate for turning bearish. In peak euphoria, peak bull run, I actually lost like 500 subs. I lost like a bunch of Twitter followers. Everyone was hating on me. The fact of the matter is we trust the charts, we trust the facts, and we trust our systems. We were calling for a correction from 60K, 64K to $18,000. Everyone thought we were crazy. We saw the correction. It happened. It came on. We hit 18K. we started accumulating and buying Bitcoin. We posted it in our VIP, we posted on our Telegram. There were accumulation phase between 16.5K and 21,000. We ended up buying our lowest purchase at 16.5K, turning bullish, and we warned you guys for about 4 months that we're developing a bullish descending wedge formation, which was a macro reversal pattern, and we saw that reversal play out. Just after we broke out of that pattern, we gave a price target for the top of the bull run, which was priced at 96,000. We later revised that price prediction to 94.3 to 94.6, and we'll give you that price prediction here. According to what we did in our prior videos, our analysis was simply measuring the percentage change from yearly breakouts. Okay, this is our dead cat bounce high of the prior cycle, dead cat bounce high of the prior cycle, dead cat bounce high of the prior cycle. We measured the percentage gain from the high of the dead cat bounce, okay, to the exact top of the next cycle. We did that in our prior cycle and the one we just had in 2021. We got the percentages, we divided those percentages by each other to get the ratio. We applied that ratio, I believe it was 0.1935 or something. We applied that ratio to percentage change of the prior cycle. That gave us a percentage of 95.67. We took 95.67, we applied it to the dead cat bounce high of the prior cycle, and that gave us a price target for Bitcoin's top at 94. We'll give it here, 94.397, $94,397. Now, will this be the top for Bitcoin? I don't think so. I'll explain that in a second, but considering we gave this price prediction over a year and a half ago, I would say to give ourselves a pat on the back is expected. That is a fantastic target, and guess what? It is a level we need to pay some significance to. We can't ignore this level. The reason we can't ignore this level is because I'll give you an example. Number one, we are seeing some daily potential bearish divergence develop. We are seeing on the short-term chart a potential top signal over here if momentum doesn't flip bullish again and absorb this selling pressure. There are some signs why this level needs to be, held to some degree of significance. We also seen the total 3 breakdown at this point, and we have seen Bitcoin dominance continue to push higher. So I don't believe this is a top for Bitcoin, but it is a potential local level of significance and resistance that we need to push through, and we are actually clearly struggling against. Now let's talk about when I believe the top will be in. The reason I don't think the top is in yet for Bitcoin is because, one, economically, we have a bunch of interest rate reductions still pending in the pipeline. Now, if we look at the impact of interest rate reductions on risk asset markets, as we discussed in the intro, we know that eventual continuous reductions, and I think I deleted it looks like I've deleted my flowchart. Anyway, eventual continuous reductions in interest rates essentially result in the cost of debt becoming cheaper. If the cost of debt is cheaper, the what we call a debt to service ratio, so the amount of money you need to forego every month, every week, every quarter, whether that be an individual company, to service that debt decreases. Therefore, your available household cash flow or available cash flow increases to then acquire cheaper debt to purchase income producing assets to then exponentially increase your net worth, while on the other side, inflation begins to rise and the strength of the dollar begins to decrease, further pushing up the asset price, which is generating income for you. So the whole cycle, the whole process is inherently bullish for risk assets. So if we continue to go down that path, which is reducing interest rates, eventually the end result is that asset prices will continue to rise. Now, when will the top be in for Bitcoin? According to date range analysis, we have 2 prediction methods. Number one, we have got the standard 4-year cycle theory, which suggests the 6th of October 2025 will be the top. Number 2, we have the 12 to 18 bar theory, which suggests the potential top will be between March and April 2025. Now, that theory is a theory I created over 12 months ago, the 12 to 18 bar theory. Those are the 2 top theories we have. Now, when will Bitcoin top is a much harder question. We are in price discovery. It becomes a little bit more ambiguous and situational. But what we can see here on the monthly chart is we're seeing a positive momentum shift from our prior peaks, which is a good sign. It does mean that Bitcoin on the monthly and momentum is starting to pick back up positive again, which could result in extended continuations higher. Number two, we are watching the Vortex trend tracker on the weekly. When the trend tracker reaches this trend line, that could potentially mark a top. But the most important thing, guys, is not when the top will be in, it is adequate risk management. It is scaling out of positions when you're at profit, taking profits when the market is moving upwards, and by the time the top is in, you generally want to be out of your positions. The most important thing is capital preservation, and that is why we are less focused on predicting the exact top, but more focused on setting up strategies and plans to avoid holding through massive drawdowns when that next bear market comes, potentially at the end of 2025 or in 2026. So again, when will the bear market start? According to our technical levels, when we break through the leading span A of the Ichimoku cloud indicator and the Gaussian channel upper band, that is when we have entered historical bear markets. So when that occurs, that is when I'll flip bearish on Bitcoin. Until then, I am playing the price action level by level. I am watching how the price action develops in the short term, and particularly watching trends such as this. While we are sitting above this diagonal trend, I will remain bullish on Bitcoin. This trend, when it does break toward the downside, I will be flipping bearish on the short term for continuations to prior levels of support, and only upon the loss of 86,000 would I expect a steeper correction. The loss of 86,000 could result in a steeper correction to as low as 76,000, okay? And that is potentially when I'd start to consider, well, maybe the top might have been in for Bitcoin. But until then, it is looking good. Until then, I am expecting higher. Now, the altcoin market, that is a whole different ballgame. We all know how altcoins move in comparison to Bitcoin. It is a little bit more sketchy. We can see Bitcoin go up and altcoins go down. We can see Bitcoin go down and altcoins go up. But mostly when we see Bitcoin goes down, going down, altcoins just get decimated. And that is likely to remain a fact while Bitcoin dominance continues upwards. So thank you for tuning in, guys. Hope you have a fantastic day. I guess the key takeaways from today's video is Bitcoin is still on an uptrend. Bitcoin is still bullish. There are some potential warning signs developing on the altcoin market cap, which you need to be aware of. The macro charts are still a little bit ambiguous to when the top will be in, and that likely remains a fact until the exact top is actually in. And right now, the best thing to be doing if you are unsure is to, of course, assess your risk management, ask yourself what you can afford to lose, and watch the validations and invalidation points on the charts. Thanks for tuning in, guys, and we'll catch you in tomorrow's video. See you then.